Welcome to the 2021 Virtual Fall Tax Meeting. I'm Julie DeVola, Chair of the Tax Section. And first, I wanted to thank our members for their loyalty through these difficult times. While the sections worked hard to replicate the experience of our traditional meetings, I know that we all miss the camaraderie of in-person. And one silver lining of these virtual meetings is that we have a greater number of people able to join the meetings. As of this morning, the attendance for this meeting stands at over 1,200. I'd also like to welcome our first-time attendees and hope that they'll join us once we get back to in-person meetings. The first-time attendees and anybody else who's interested in learning more about the section or about this meeting should consider going to the new attendee orientation reception, which is hosted by the Young Lawyers Forum and the Diversity Committee. That session will be from 4:30 to 5:30 Eastern Time today. I also want to extend a heartfelt thanks to our sponsors. Our meetings just simply couldn't happen without their support. I particularly want to thank our Diamond sponsor, Tax Notes, and our Ruby sponsor, Morgan Lewis. I also want to thank all our Emerald sponsors, which you'll see listed on the screen. Thanks also to Thomson Reuters, our publishing sponsor, and to the Northwestern Pritzker School of Law, the educational affiliate for our journal, The Tax Lawyer. Since this is my first meeting as chair, I'd also like to take a few minutes to highlight my priorities for the year ahead. However, I promise to keep it short. I realize that we're all very interested in hearing from our speaker, Thomas Barthold, Chief of Staff of the Joint Committee on Taxation. So first, I want to say that really it is an honor and a privilege to be chair of the section. In many ways, my priorities are the traditional priorities for the section, but informed by our shared experience over this past year. As tax lawyers, I think we have an appreciation for the role that the tax system plays in a civilized society, but the pandemic puts greater emphasis on this point. In many cases, the economic relief delivered through the tax system represents the only lifeline for vulnerable populations who've been hit the hardest by the pandemic. A recent study indicates that payments of the expanded child tax credit lifted over 3 million children out of poverty in July alone. And it's estimated that the CTC could decrease the rate of childhood poverty by 45%. In the wake of the turbulence and uncertainty of the past year, it seems more important than ever to recognize and expand the section's work for its members, the tax community, and the public. In terms of government relations, the section plays an important role in providing formal and informal comments to help shape an equitable, efficient, and workable tax system. New legislative and administrative proposals suggest that the section will have its work cut out for it in the year ahead. As far as justice, equity, diversity, and inclusion, my new favorite phrase, JEDI, my passion for supporting a better, more equitable tax system and access to that tax system is matched only by my passion for promoting justice, equity, diversity, and inclusion in the tax system and in our profession. I see these two goals as integrally linked. An important first step to promoting a more equitable tax system is to diversify the tax bar so that it represents the population served by that system. For this year, we have a new officer position, Vice Chair, Membership, Diversity, and Inclusion, that was added by the section, and Carolyn Cirillo was chosen to serve in that position. A little bit later, Carolyn will be spending a few minutes describing the section's work to promote JEDI. For my part, I'll simply ask that each of you help us in this endeavor. I'm only here before you today because of the mentors and sponsors who supported me at a time when it was much more difficult to be a woman in the tax section. Promoting JEDI requires intentionality and the support of each of us. For pro bono and public service, again, having a workable and equitable system not only requires having good laws and regulations, but also equal access to that system. While these social benefits are being delivered through the tax system, increased demands on the IRS and the logistics of the pandemic mean that taxpayers can't rely on the IRS to help them navigate that system. The tax section continues to play an active role in addressing these needs. Wells Hall, our chair-elect, will be mentioning some of the tax section's pro bono work, but I hope you'll check out our pro bono page for a description of the good work that the tax section is doing and that you'll reach out to us if you're interested in getting involved. Before I leave the topic of public service, I also want to mention the Taxaction's charitable fund, the Tax Assisted Public Service Fund, TAPS, which promotes tax-related public service. I think we have a slide that's going to talk about Giving Day, and that's something I wanted to mention. The TAPS fund funds the Christine Brunswick Public Service Fellowship Program, which provides 2-year fellowships for new tax lawyers interested in tax-related public service. This year, TAPS has been chosen to participate in the ABA's Giving Day campaign, which will happen on October 28th. The Taxation Council has formed a leadership circle to match contributions from other donors. Our goal for the Giving Day campaign is $25,000. Please be on the lookout for more information from the section about this program. And in the meantime, in the chat here, you'll find a link to the section webpage that tells you more about TAPS and allows you to donate. Finally, in terms of legal education, bringing you exceptional CLE will continue to be a priority for the section. The virtual meetings have only been possible because of the unwavering commitment of our section staff, who continue to go above and beyond to organize these meetings while advancing the section's other goals. There are 2 upcoming meetings that I want to mention. The first is the 32nd Annual Philadelphia Tax Conference, which we expect to be held in person at the Union League of Philadelphia on November 8th to 9th. The other is the 2022 mid-year tax meeting, currently scheduled for January 27 to 29. While we haven't made a final decision about the mid-year meeting, the current plan is to have mid-year be our first hybrid meeting. We're hoping that the hybrid format allows those eager to meet in person an opportunity to do so in Orlando, while retaining a virtual component that will allow members to participate remotely. As mentioned, Carolyn Sorello, our Vice Chair of Membership Diversity and Inclusion, is going to spend a few minutes talking about the Section's DEI initiative. So I'm going to turn it over to Caroline now.
Welcome to the fall meeting, and thank you for joining the plenary session. I'm honored to serve as the section's first vice chair of Membership, Diversity, and Inclusion, and grateful to work closely with so many section members on these important activities and priorities. Our goal is to elevate and prioritize our efforts to enhance justice, equity, diversity, and inclusion in the tax profession, and in doing so, increase our membership to include those practitioners who may not have viewed the section as a community within which they could actively participate, contribute, and lead. To this end, we have spent the last few months working with Julie and her leadership team to review the section's diversity and inclusion plan, which I believe is going to be posted to the chat. It's definitely available on the section website, and if you can't find it, send me an email. I'd be happy to send it along. In reviewing the plan and examining how to better focus our efforts on diversity, equity, inclusion, we have been so fortunate to have the assistance of many section members and Genevieve Borrello, the section's new director of membership, marketing, and diversity, all of whom share this objective, working diligently on existing programs and new initiatives. For example, the Women in Tax Forum continues to build on its amazing inaugural year through the tireless efforts of Heather Fincher, Lauren Azebu, Bree Siciliano, and Sarah Ma over the past 2 years. Women in Tax Forum has hosted our extremely popular Zoom teas with leaders in the field, law student outreach panels, wellness seminars, and conference programming. I welcome the new leadership of WITF, Amanda Varma, Sarah Paul, Karina Federico, Brittany Johnson, and others, and thank them for all the time and effort they have invested to date and will certainly invest in the coming year. The section also offers diversity and inclusion scholarships, and I encourage everyone to share this information with potential beneficiaries. These amazing scholarships cover the cost of meeting registration and travel expenses when we're back in person. This removes an often significant obstacle to attending a meeting and provides the recipient with all the benefits that come with meeting with you and our other colleagues. In addition, the section will soon announce new diversity, equity, and inclusion fellowships that will offer a comprehensive 3-year program to a class of 5 fellows every year. The fellowship will cover the cost of ABA dues, section dues, meeting registration fees, and related travel and lodging costs. The fellows will play an active role in the section activities, will be assigned section mentors, and will benefit from great regular programming throughout the year. Our hope is that as our fellows graduate, they will continue to participate in the program as future mentors, sponsors, and leaders of the section. To ensure the success of this effort, we will look to you and other members of the section to serve as mentors and to welcome the fellows into the fold. This is such an exciting opportunity to play a positive and material role in the professional life of a colleague and to pay it forward. This groundbreaking initiative is designed to expand our membership and diversify our leadership and tax bar. We will formally announce the fellowships in the coming months with the hope of starting our first class in January 2022. And this is just the beginning. If you would like to participate in the section's effort, please reach out to me or anyone else in the section leadership. We welcome participation and frankly could always use an extra set of hands. Thank you so much and enjoy the meeting.
All right. Thank you so much, Caroline. That was terrific. And I'm going to go to Wells next. But before I do, I want to mention one thing I forgot, which is I'm going to put my email address in the chat. And if anybody has comments or suggestions for the tax section for our meetings, please feel free to reach out to me directly. And with that, I'm going to go to Wells Hall, who's our chair-elect. Wells is going to describe the sections, some of the section's public service initiatives. He'll also describe some of the highlights for this meeting that you won't want to miss.
Thank you, Julie. I want to briefly highlight a few of the section's pro bono programs of special interest to young lawyers. Since 2013, in cooperation with the IRS Stakeholder Partnerships, Education, and Communications Office, hundreds of section members have conducted military VITA training at more than 40 military bases through the Adopt a Base program. Last year, the training was virtual. This year, it will vary based on the COVID protocols at each base. In early October, we'll be kicking off the program and recruiting instructors for the December and January training sessions for the 2022 filing season. Since 2018, the section has offered quarterly webinars free of charge to all ABA members interested in representing low-income taxpayers, providing them with the nuts and bolts they need to deal with the types of tax cases encountered by low-income taxpayers. A list of the previous webinar recordings is available on the tax section website under the Pro Bono link. Both the Adopt a Base Military VITA program and the Nuts and Bolts series are excellent ways for young lawyers to get involved in pro bono and at the same time develop their presentation and advocacy skills. If you are interested in getting involved, reach out to Meg Newman of the section staff or Sherry Dillon, Vice Chair of Pro Bono and Outreach for the section. Next, I would like to briefly highlight what we have in store for us in the virtual fall meeting this week. Each day there will be 4 90-minute programs starting at 10:30, 12:30, 2:30, and 4:30 with 30-minute breaks between the segments. All times are Eastern Daylight Savings times. You can expect to receive an email each morning with the registration link to the attendee hub with the schedule for the day. If you miss a program, or if you're interested in programs that overlap, you can view the recording for 90 days at no additional charge. For information on CLE credits, go to the link in the fall meeting program. While most of the committee programs are at the advanced level, a number of the programs are recommended for young lawyers and law students in color-coded purple, including this afternoon, New Ways to Transform Your Tax Research, Entity Diagramming, Statute Analysis, and Predicting Outcomes with Artificial Intelligence, and more. This is at 2:30 this afternoon. Several committees have scheduled networking events during the afternoon slots, including a new attendee orientation reception this afternoon at 4:30, sponsored by the Young Lawyers Forum and the Diversity Committee, and the state and local taxes roundtable being scheduled at the same time. While not like being together and meeting each other face to face, seeing each other in the gallery comes pretty close. Other social networking events this week include Tuesday at 4:30, Capital Recovery, Leasing, and Tax Accounting, and the Civil and Criminal Tax Penalties Networking event. Wednesday at 4:30, the International Committees, that's the Foreign Lawyers Forum, the USA FTT, Transfer Pricing, and the FAUST committees, and the Pro Bono Committee will be hosting networking events. Thursday at 12:30, there will be a corporate transaction open discussion, which is always intriguing and challenging with a lot of current transactions for discussion. Thursday at 4:30, the Administrative Practice and the Court Procedure and Practice networking event. And Friday at 4:30, the Women in Tax Forum Community and Conversation. Also, be sure to note the programs that will satisfy your state bar ethics credit requirements, such as the Professional Opinions and Exempt Organizations program being presented by the Exempt Organizations Committee on Tuesday. I believe that's at 4:15, and the Standards of Tax Practice Committee meeting at 12:30 on Friday. Julie, back to you to introduce our plenary session speaker.
Great. Thank you so much, Wells. And I hope people will look into those sessions. I know I'll be attending a lot of them. And as a matter of housekeeping, I want to note that we're going to go now to our plenary speaker. But if you have questions, you can add those questions at any time in the chat function. And there's also, I think this is new, there's also the ability to upvote on questions. So if you like particular questions, vote for them, and we'll prioritize the questions based on what viewers like the most. So now I'm just so happy to introduce our plenary speaker. Thomas Barthold is the Chief of Staff of the Joint Committee on Taxation. He joined the Joint Committee as an economist in 1987. He was named Chief of Staff in 2009. Over the past 3 decades, he's worked on a wide variety of issues for the committee, including capital gains taxation, savings incentives, environmental and energy taxes, estate and gift taxation, the taxation of multinational enterprises, low-income housing tax credit, tax-exempt bonds, and tax-exempt organizations. So you can see his experience runs the gamut. For his work at the Joint Committee, he's won numerous awards, including the Tax Foundation's Distinguished Service Award, the Tax Council Policy Institute's Pillar of Excellence, and the National Tax Association's Bruce Davies Albert Davis Public Service Award. Today, Tom will be discussing what it means to rewrite the Internal Revenue Code in a pandemic. As you know, on September 15th, the House Committee on Ways and Means voted to report out of committee a substantial rewrite of the Internal Revenue Code as part of the budget reconciliation process. Tom will be talking about likely next steps, what the budget reconciliation process means for the development of tax law, and the importance of the Byrd rule. In addition, Tom will discuss how the pandemic has changed the tax legislative process for members of Congress and their staff, and using the development of the current legislative recommendations for budget realization as a backdrop. Reconciliation as backdrop, I'm sorry. Tom will describe aspects of the legislative process as they used to be and as they are today. And so with that, I thank Tom very much for being here.
Well, good morning. And Julie, thank you for the kind introduction. And I hope in the time that we have, I can actually cover all the points that I outlined that you just said I would address. As you noted, this past Wednesday, the House Committee on Ways and Means voted as part of budget reconciliation process to report out what could be a substantial rewrite of the Internal Revenue Code. And so I thought for the Workaday Tax Bar, who's here with us today, that this might be a good opportunity to review part of the process of how a bill becomes law. It's not exactly as it was taught to me in middle school civics, and so there's some important points, some important details that can affect ultimately your tax practice. Now, the process that we're involved in now is called budget reconciliation. The importance of budget reconciliation as a process is that it limits debate and it limits the ability of a filibuster in the Senate. Underlying the budget reconciliation process are two very important concepts. And if legislation satisfies these two strictures, then the legislation is filibuster proof in the Senate. First, the legislation need not have more than a simple majority to make it through the Senate. That's the key part. But the process was established to help ensure that a timely federal budget was put in place without being bogged down or held hostage to debate on policies not central to running the government. So it's basically the legislation has to be about funding and raising revenue. A provision in that legislation may be challenged as policy outside of the budget process, masquerading as budgetary. So, for example, in the past, prohibitions on abortion have been raised, and they've been deemed to be outside the budgetary process. If there is a successful challenge, just to reemphasize the importance of the budget reconciliation process, it raises a 60-vote point of order against the legislation, and thus in today's 50-50 Senate, nearly 50-50 House, the legislation may fail. Well, what's this mean in terms of tax provisions? For example, in the 2017 legislation, the Congress imposed an excise tax on large university endowments. It created under that, in an initial draft of the legislation that was to be voted on in the Senate, an exemption for work colleges from the university endowments. This was challenged as a special benefit to work colleges that was outside of the budgetary process, that it was a policy to favor certain sorts of institutions over other sorts of educational institutions. And on that basis, that exemption was stricken. In terms of workaday process for the staff of the Joint Committee, what's this mean? Well, one part of the case that is brought to the parliamentarian in analyzing specific language is, does that language have a budgetary effect? So often the starting point for some of the analysis is, if we were to bifurcate a provision of the proposed legislation, would there be a separate budgetary effect? And then if there is it large? Is it significant? How might this apply in the legislation that you're reading about in the news media today? Well, a question of current legislative design is, you can see in Senator Wyden's Clean Energy for America bill that the Finance Committee attempted to mark up earlier this spring. Some of the provisions of that legislation key off of a requirement that would require that workers be paid a prevailing wage, sometimes referred to as Davis-Bacon standards. A question that's been raised as to whether these green energy proposals would be part of the current legislation is, would this Davis-Bacon requirement be subject to challenge as a broad policy about labor that's outside of the budgetary process? And if it remains in the legislation, would it then raise that 60-vote threshold that would have to be satisfied, likely making the legislation fail? You probably last night or woke up this morning to read that a similar example, not in the tax realm, was that the parliamentarian has ruled that immigration reform cannot be considered as part of this broader legislation. Again, an example where a determination has been made that to focus on what's necessary to run the government, funding programs, raising taxes, budget. Was immigration part of that? No, it was deemed to be a separate policy outside of the budget. So that's the first key thing to think about in what budget reconciliation means as part of the process. The second important part of the concept is ensuring that the government is on a stable, long-run fiscal path. And this is often referred to as the Byrd rule requirement. The legislation to satisfy the budget reconciliation process is not permitted to run deficits in the second decade, third decade, or fourth decades after the current 10-year budget period. Again, failure to satisfy that can lead to a 60-vote threshold for legislation in the Senate. What's this mean again for the staff of the Joint Committee on Taxation? It requires that we provide members with a judgment that's not usually presented in the normal contemplation of tax legislation. In the normal course of the process, members are always concerned about the fiscal effects of the proposals that they have before them, but most legislation is judged under a 10-year budgetary period standard. So under the Byrd rule, we're asked to look at effects that are outside the 10-year period and to try and make a projection for the years 11 through 20, 21 through 30, 31 through 40. This is actually difficult as a matter because all of our standard estimates are against a 40-year baseline. There are models, our economic models are keyed to a 40-year baseline. And in fact, we don't try to model specifically with detail beyond that 10-year period. There's also a question in this for the parliamentarian's judgment regarding at what level to apply the Byrd rule. Is it title by title? Would it be enough that all changes to the individual income tax do not have an effect in the second, third, and fourth decade? Or is it subpart by subpart? Or is it provision by provision? If it's provision by provision, what then is a provision? Can you subdivide a provision? So there's actually a lot of detailed litigation before the parliamentarian as to whether a Byrd rule point of order might be raised. Why might this be important in terms of looking at legislation before you and how it might affect the structure of and design of the tax law? One thing that I know that everybody in the bar is quite familiar with is that the Bush tax cuts of 2001, 2003 expired after 10 years. They expired because that legislation, both instances, were passed under the budget reconciliation process. The 2001 legislation mustered 57 votes, including some bipartisan votes, but did not have sufficient number of votes, 60, to forestall a filibuster in the Senate. And for that reason, the tax reductions that were enacted in the 2001 legislation were sunset so that there was not a projected increase in the deficits in the second, third, and fourth decades. Again, you can see more recently in the 2017 tax legislation, most all of the individual provisions of that law were sunset after the year 2025. And in addition, there were changes on the business side from using the standard of EBITDA to EBIT. There was enacted an amortization of research expenses, an increase in the effective tax rate under the GILTI tax regime, and an increase in the effective tax rate under the BEAT tax regime. Again, this was so that the legislation could be judged not to increase the deficit in the second, third, and fourth decades beyond the current budgetary period. What's this mean in terms of the current legislation that Ways and Means has just reported out? If you've had a chance to look at that legislation, you will have noted that the child tax credit, which I know that Julie had mentioned in her opening remarks, would be extended beyond the current year, but it would sunset. But on the other hand, the expansion of the threshold breakpoints for the 39.6% bracket, the increase in the top rate of tax on capital gains, the expansion of the net investment income tax were all permanent in the Ways and Means legislation. It's a case of the Ways and Means Committee members looking ahead to the legislation going to the Senate and having to meet a standard of not increasing the deficit in years beyond the first decade. So that's the important framework of reconciliation. It has to be about the budget, and it has to promote fiscal stability in decades beyond the current 10-year accounting period. Well, what else about how a bill becomes law? And again, the middle school version maybe versus the current congressional process. Well, the middle school version said they have hearings on legislation. Has the Congress had hearings? Yes, but I think one thing that if you follow the Congress, you'll have noted over the past, let's say, 20 to 25 years, is that there are fewer hearings on draft legislative proposals than there used to be. The hearings tend to be more general subject matter. Let's have a hearing about the overall international tax system. Let's have a hearing about the overall distribution of after-tax incomes. Less about here's a specific proposal that would do X. Here's another proposal that would affect business income Y. But have they had hearings? Yes. And a number of the hearings, for those of you that may have tuned in, are much like we're doing today. The Congress, in response to the pandemic, has gone virtual on a lot of hearings. But again, there have been hearings. They've taken comment, written testimony, as well as oral testimony. In talking about the hearings, I mentioned draft legislation. In other words, part of how the bill becomes a law in the middle school telling is that a member writes a draft. A draft's introduced into the House or Senate. People comment. There are hearings. Well, a number of observers assert that the process has evolved so that we have much more surprise drafts, that the language is then not vetted thoroughly and not as mentally tested. Now, as an example, some people would say, look to 2017, when former Ways and Means Committee Chairman Brady introduced his mark and legislative language for what ultimately became the Tax Cuts and Jobs Act. He introduced that legislation to the public and to the Congress on Friday, and markup of that legislation began the following Monday. More recently, you can see in the Ways and Means legislation that was just reported out last Wednesday, all of the revenue-raising title of that legislation was introduced as part of Chairman Neal's amendment on Monday morning, and the markup for that, the legislative debate for that, began on Tuesday morning. A number of people have referred to this as really sort of surprise legislation. Why has it happened? Well, some members and staff have argued that you should not make the language public too soon to forestall, and this is kind of a cute quote that I jotted down from one meeting, the launch of armadas from K Street to fight against the legislation. I think the key question for you as tax professionals is, does the end result suffer technically from not enough eyes seeing the proposed legislation long enough? Let me make a couple observations about that point. First of all, remember that what was introduced in the committee by Chairman Brady in 2017, what was introduced essentially a week ago today by Chairman Neal, that's step one. There's a lot of opportunity to correct possible technical flaws downstream as a bill moves from committee to House, from House to Senate, possibly to conference. So it's not like legislation was introduced and then it immediately becomes law. Also, I think it's important for you as practicing attorneys or people with potential client interest in some changes, that if you look at a number of proposals or what was introduced in a Chairman Neal's mark and a Chairman Brady's mark, that it's not all brand new. For example, in the 2017 legislation, a number of the provisions that Chairman Brady introduced drew on work of former committee chairman Dave Camp in tax reform legislation that he had introduced, actually to fairly substantial fanfare and review by the ABA tax section in 2014. In Chairman Neal's mark, you can look back to the 116th Congress, and the House passed H.R. 2, which contained many of the changes relating to the child tax credit, the child independent tax care credit, increases in individual tax rates, and a number of energy provisions. Also related to potential changes in the taxation of energy, you could look to the spring markup and legislation developed by Finance Committee Chairman Ron Wyden, his Clean Energy for America Act. I see a lesson there that when a chairman or ranking member put out legislation, pay attention, even if you don't think it's going to move in the current Congress. Well, Congress thus far, in its own fashion, has sort of checked all those boxes of how a bill becomes law. As noted at the outset, we've got a bill before the committee. So what next? Well, the 2017 experience, some would say, was somewhat on hyperdrive in the minds of many. The process went from Ways and Means to House floor. Concurrent with House floor consideration, the Senate Finance Committee marked up and reported out amendments. There were more amendments on the Senate floor, a call for conference, behind the scenes conference prior to a formal conference, and the legislation was passed out of conference to both houses for passage, and it was enacted. Things are going to be a little different this time. With a 50-50 Senate, no Senate committee is likely to be able to have a majority to vote to report out a Senate amendment. You can see that already in in Chairman Wyden's consideration of the Clean Energy for America Act. With a 50-50 vote, no bill can be reported to the Senate. Why might that be important for the working tax bar? No report, no committee report. Committee report, important part of legislative history. Sometimes it helps out you as practitioners, helps out the Treasury in developing guidance, helps out the courts in interpreting the legislation. So without a Senate committee report, if there are provisions that come in from the Senate side, we're going to be a little bit light in terms of legislative history. There also appears, in addition, currently, to be an emphasis from House and Senate leadership, and from the White House perhaps, for swift action. So there's some talk that leadership from both the House and Senate may be meeting to pre-conference potential disagreements in terms of policy approaches. If those agreements are reached, they could be offered as amendments to the Ways and Means Committee legislation at the House Rules Committee before legislation is provided to the House floor for vote. If it passes the House floor, it could go directly to the Senate. Again, noted no committee action in the Senate, so amendments maybe on the Senate floor. What I want to take from this is you may not see a conference, you may not see a conference agreement. And so I think this legislation, more so than the 2017 legislation, more so than the Tax Reform Act of 1986 and a number of other significant changes, is likely to have less elucidation in legislative history. Now, I do want to leave some time for questions. Let me tell you just a little bit about process and maybe some background for those of you that are not that familiar with the Joint Committee and what my colleagues and I do. the Joint Committee was established in 1926, not long after the income tax was imposed, because members found some of the tax law kind of complex, and they wanted some in-house advice and expertise. We're a nonpartisan staff. Makes us unusual on Capitol Hill. We work in a very partisan environment, obviously, but we're nonpartisan. We work with members and their staff from both sides of the Hill and both sides of the aisle. We work independently and in confidence. We work with these members and committees in developing legislative proposals. We then work with the offices of the Legislative Council in developing and reviewing statutory drafts for the committees and for individual members. Our staff ghostwrite the legislative histories, the committee reports for the Ways and Means Committee, for the Finance Committee, and a conference committee, if it's called. As part of this process, we meet with members, staff, committee staff, Treasury staff, IRS staff, and all sorts of outside interests to try and gain information and understanding of how the proposed legislation might affect taxpayer behavior, might affect taxpayer compliance. Also, and importantly, particularly for budget reconciliation, is under the Budget Act of 1974, the staff of the Joint Committee is charged with providing the members of Congress with estimated budgetary effects of any change in the Internal Revenue Code. So we provide economic analysis, we provide revenue analysis, we provide distribution analysis. At a legal level, we try to issue spot, we try to look for unintended consequences, and we try to offer suggestions to make the statute workable and technically correct. Has the pandemic affected the way we work? Sure, it has, the same way it's affected all of you. We're pretty much 100% remote, where we used to, I would guess, do all of what I just described face-to-face 90% of the time. Now it's conference calls, somewhat seemingly endless conference calls. I'm sure you're all familiar with. So where we used to, in reviewing statutory language, maybe get 10 people from a member's staff or a committee staff, Office of Legislative Counsel, some of my colleagues sitting around a table and going through statute line by line and saying, does this implicate language elsewhere in the code? Are we inadvertently picking up concepts we don't want to pick up, or do in fact we want to key into those concepts? Now that all happens in terms of long email discussions or conference calls. I think a cost to that is that we have less spontaneity to our discussion. In some ways, less drawing people in. It means for a number of simple questions, or maybe not so simple questions, when you're in the office, you can walk across the hall, gather a couple people together and talk it out. That's all now gone to an email chain or a separately scheduled conference call. I think I'll add, in my view, for my reading, since I have to try and keep abreast of this, dramatically longer email chains. On the plus side, a number of my colleagues say that compared to some past legislative efforts, they feel more rested more routinely because they're not spending 30 minutes to 2 hours commuting. Now, the flip side of that means is that that's even maybe more work time sometimes and less family time. Well, I think we're doing, on the whole, the job that the members of Congress expect. I think we've worked through the unusual aspect of being on video, being not in person, not being able to walk across the hall. I think we're still credibly issue spotting, raising questions. Our ability to provide economic analysis has been in no way diminished. But I think for the working tax bar, the question will remain, will the current process and the pandemic-induced working environment lead to a less technically sound product? Time will tell. We've only cleared the first hurdle. with the bill being reported out of the Ways and Means Committee. And it's the first hurdle of, I guess, should continue the analogy and say, a potential legislative sprint. There's several more hurdles to undertake. I've tried to give you a little bit of a sense of the importance of the budget reconciliation process, a little bit of how the current congressional process crafts legislation. I hope for the workaday, let me call it the workaday tax bar, this gives you a little bit of appreciation of when you finally see the final product, why some things may appear as they do. And with that, to leave some time for questions, I'll wrap it up here. Happy to field any kind of question that you might send in. I haven't been looking at the chat. Let me turn it over to Julie, and she can direct questions to me. And again, pleasure to be with you today. And I hope some of my comments were of value to you. Again, really nice to be here.
Oh, and so great to have you. And thank you for taking time. I know it's like so busy right now, but that was just really, really helpful. So much of what's going on now is in the process part of it, and very, very helpful to get a great, straightforward explanation of it. So thank you for that. Before I turn over to the questions, I do have a question about, you were talking about the Byrd rule and kind of the 10-year impact. And there's different things that we hear about what gets counted, as a revenue raiser and what doesn't. And I know for some purposes, it's only the things that are actually like changes to the tax code. So as an example, when you talk about, funding for the IRS and whether funding for the IRS will produce more income, that's not a change in the tax code. And so that's not counted for some purposes. For the Byrd rule and figuring out what's the past the 10-year, can you help me understand kind of what gets counted and what doesn't?
Well, it means I need to spend more time explaining the Byrd rule.
Sorry. Did I just
No, that's fine.
No,
that's fine. No, it's because it is an important point. The basis of it is what happens 11 years from now and beyond. So, for example, real simple example, expansion of the child tax credit, we know is basic matter, reduces federal receipts. We've been enlarging the child tax credit. We're going to pay it out to more people. So if we ran that forever, and that were the only change that were being contemplated in this legislation, it would clearly project revenue losses in the second, third, and fourth decade. And so for that reason, assuming the Ways and Means Committee chose not to extend it permanently. They are willing to, in their legislation, to make permanent the expansion of the child and dependent care tax credit, which also would have revenue losses on its own in the second, third, and fourth decade. But they've also extended the lowered and made permanent the breakpoints for the 39.6% bracket, increase in the capital gains tax rate, expansion of the net investment income tax, for example. Those all raise revenues continually in the second, third, and fourth decades. And so the balance that they're choosing is, we know some things are going to lose revenue. We're trying to have a balance that looks like on net, it will not lose revenue after the current decade. That's why I said part of it gets down to, and I think what becomes confusing, I think even for staff, is when do you look at a subpart of the bill as the package, and when do you look at an individual provision? The child and dependent tax care credit, in my example, clearly as an independent provision loses in the out years, but it would presumably be treated as part of the package of individual income tax changes. And so as long as that looks like on net not to be losing revenue in the out years, it should satisfy the Byrd rule. That was kind of long. I hope.
No, that was it was very helpful. So thank you for that. Now we have a question from the audience about what prompts the Joint Committee on Taxation to issue its report.
Report. We get literally, 1,000 or more requests from member offices per year, and we treat all those requests in confidence. On our website, you can see what we produce publicly. And so public documents that we produce is we produce background material for hearings that the Ways and Means Committee, Finance Committee may hold. There are some mandated reports, such as annual tax expenditure analysis. We always produce markup documents for the markups in Ways and Means and Finance. We produce revenue analysis and sometimes distribution analysis, and that's because that's requested by the chairman and/or the chairman and ranking member. Beyond that, we don't publish that much stuff. You will see references sometimes in the press to a report or an analysis by the Joint Committee. Many times that is in private correspondence to a member's office. So in terms of what makes us do a report, it's active legislation and a few mandated reports. We also do a couple, as I'll say, as a helpfulness. We always try to review the president's budget. We always try and give an overview of the federal tax system as in effect as helpful to congressional staff. But I sense there might be a little bit more of a follow-up question to that. So Julie, was there more?
No, I don't think for that there was. I think relating back to actually my question, we kind of had a question about how does a CBO budgetary impact relate to or interact with a JCT budgetary impact, and which is controlling for the Byrd rule?
Well, officially, it's CBO controls for the Byrd rule, but by the Budget Act for tax provisions, the CBO reports what the Joint Committee does. So, in simple terms, the CBO is pretty much all about the spending side of the budget. And if it's tax, it's the Joint Committee on Taxation. There are a number of areas where there's overlap, and we work, we coordinate on those. For example, in addressing changes to the advanced premium tax credit under the Affordable Care Act. There are changes that are made that affect insurance coverage as well as how much is run through the tax credit system. We jointly work on estimating those proposals. The official reports are CBO reports. There's always a CBO report for any legislation that passes the House or the Senate.
Okay, thank you. And then I actually just got another one. Is it permitted under the Byrd rule for Congress to enact a tax provision that only impacts years 11 and forward, or must the changes relate to years 1 through 10?
You can clearly have out-year effects. Make a provision permanent. In other words, increase the top tax rate on capital gains. The main purpose of what most people take as the Byrd rule is the out-year deficits. So, for example, if you were to say a tax cut will come into effect in the year 2035, that would clearly fail the Byrd test, because it's all about reducing revenues in years beyond the current budget period. Within the current 10-year period, you can raise taxes, lower taxes, essentially do whatever you want. The Byrd rule is trying to make an assessment of the longer term budgetary effect.
Thank you. That's really helpful. I have the feeling that you're not going to want to answer this next question, but we got it, so I'm gonna ask you. is whether you can basically handicap the chances that 6751B will do it next to the cut.
Well, if in a race you haven't fouled in a hurdle race, you haven't fouled if you cleanly clear the first hurdle. And so it's cleanly cleared the first hurdle, right? Yeah. So I don't know if I don't know if it makes it to the finish line. That's up to the members to decide. In its favor, is it does raise a modest amount of revenue. So to the extent that they're trying to have offsets in this bill, that's a point in its favor.
All right, thank you. That was actually more than I than I thought we'd get. Okay, so we have a question from the audience. The new paid family and medical leave program in the reconciliation bill amends the Social Security Administration. Well, anyway, they need to establish a new program to be administered by Treasury with no dedicated tax funding, I guess. Is this structure necessitated by the budget reconciliation rules?
I interpret the question to say not having a dedicated tax necessitated? No. You can create, again, they're going to be looking at the overall deficit effects in years beyond the 10-year period. So if the other tax changes that have been made satisfy that, we can have an increased spending program. So.
All right. I think that's the last of our questions, and I want to let you get back to the very important work that you're doing. We're just so grateful for you taking time with us today and for your clear and really, really helpful presentation. So thank you again for that.
Oh, you're most welcome. Nice to be with you. Wish I could see the screen of those 1,200 people you said signed up. That would be kind of amazing. I don't know if I can.
Exactly.
So
yeah, that's the bad part of this virtual format that we're in.
Let me add one additional note. If people see technical problems in the legislation, we don't try to. Our staff of, like 45 tax professionals, we don't try to do it all ourselves. So we rely on members of the tax bar to say, hey, does this really, work this way? Or I think there's a problem there. So if there is, you can contact us through our website, and we love getting those comments. It helps us think through stuff. So again, thank you very much.
Thank you for that. Really appreciate it. All right. So I want to thank the audience for joining us today. We appreciate your time. I want to be respectful of that time and let you go. But also just a minute more to thank the staff for working on both this conference. These virtual conferences do take a lot of staff support and time, and we really appreciate that. And also for all of the great work that they do. The section does have an amazing staff. So next time you're in person, take the time to stop and thank them for their great work. Again, keep your eyes open for, we plan our meetings well in advance, and we're going to need to be making a final decision on Orlando. Like I said, right now we're thinking it's going to be hybrid with an in-person component and a virtual component. But keep your eyes out for that kind of final announcement, which should be coming soon. And I hope that everybody enjoys the rest of the meeting. Again, really appreciate your time. Thank you.